with a single share of ETF, you're actually buying to a whole basket of underlying. So it gives the local retail investors and also the newer investors a chance to own some form of investments at a lower cost. Money market fund, it serves for us. It serves as excess cash facility for investors. Don't worry about the volatility. You just have to keep your feet planted, understand what your strategies are, stay invested.
So back to what I was saying. Could be us.
Hi everyone, welcome to the Beansprout podcast. My name is Gerald and today I'm at Moofest 2025, which brings together Singaporean investors for a day of learning, networking and inspiration. So today I'm very pleased to have with me Raphael, who is Senior Vice President of Intermediary Distribution at CSOP Asset Management. Hi Raphael, thanks for joining us at Moofest 2025.
All right, thanks Gerald, thanks for having me. Yes, pleased to be here. I think we're looking at the crowd. Today is quite happening.
Yes, so you may not see what's around us, but we are at Moofest 2025 and there are a lot of people who are here to learn more about investing, learn more about how we can grow our wealth through different investing techniques as well as various investing products. So maybe with that, I wanted to ask Raphael, actually I've known you for quite a number of years, since Moofest in the first year, second year, and now the third Moofest that I've seen you. Actually, I don't really know what you do at CSOP Asset Management. Can you start by giving us an introduction of what you do in your day-to-day job?
Okay, so CSOP Asset Manager, we are one of the Asia's leading ETF issuers out there in the market. We have over 60 ETFs listed on the Hong Kong and Singapore Stock Exchange. We also run the US dollar money market fund out here in Singapore, as well as China strategy mutual fund in Hong Kong. So myself, I'm Raphael. I am responsible for the Southeast Asia intermediary distribution. Basically, I work with the distributors like Moomoo, some of the banks, the brokers, the insurers, and even some of the pensions.
So I think one of the points you mentioned earlier is that you are actually very big in the Hong Kong market, but investors in Singapore may not be so familiar with CSOP Asset Management. But for myself as an investor, something that I've grown to learn would be your suite of ETFs in the Singapore market, such as the REIT ETF. So for investors who might not be so familiar with the ETF product, can you share with us just like how you introduce this to a primary 5 student?
Okay, so you can think of it as ETF is like a vehicle. You can actually buy into a basket of securities or underlying stocks. For instance, as Gerald shared earlier on, our 𝗔𝗵𝗵𝗀𝗍 leaders index ETF. So basically, an ETF vehicle will can track or may or may not, and it's really dependent on the ETF itself. For instance, an index ETF, you'll track certain indexes. Like for instance, the IHS REIT Leaders Index ETF that we are sharing today at Moofest. It tracks the large and mid-cap, most liquid S-REITs out there in the markets today. And also with this tracking, what investors are buying into when they say they buy into an index ETF is that they are buying into the underlying basket of all these securities packed into an exchange-traded fund format that is also traded on the exchange. And this allows them to access these individual stocks without having to buy into the single names. They can actually diversify some of their holdings with the use of ETFs. With a single share of ETF, you're actually buying to a whole basket of underlying. So it gives the local retail investors and also the newer investors a chance to own, I would say, some form of investments at a lower cost. And also it allows them to choose the amount that they want to invest in rather than single stock, because single stock on the SGX, listed SGX is 100 shares per lot. So ETF is only one single unit.
So as a REIT investor, I'm familiar with some of the names like CapitaLand Integrated Commercial Trust, Mapletree Industrial Trust. Would I be able to find some of these names in your REIT ETF?
Certainly, these are the broader names that you're talking to about those that are large and mid-cap ones. Specifically, like these days, the data center REITs has been popular. The IHS REIT Leaders Index comprises only on the large and mid-cap S-REITs. We don't do micro. Basically, it's just a form of, we track the index. Whatever the index buys, we buy it as well. So basically, investors that invest in the ETF, they will gain exposure to all these bigger name underlyings. And I think I just want to highlight one proposition for clients or rather investors that are looking into REITs itself. You may understand that REITs, individual REITs, definitely there will be corporate actions. be it rights issue and all. And whenever a REIT issue rights, certain investors may or may not be comfortable in subscribing all the rights. But after that, once the rights are exercised, share dilution occurs. So whereas in the ETF vehicle format, the investors don't have to worry about such corporate actions. The ETF manager, we will buy into all these rights. We will subscribe them, and as an ETF manager, we often get bulk discounts. You can think of us like we negotiate in bulk, and our terms are definitely much better than the retail clients. So this is also one of the beauty that once, or rather REIT investors should consider REIT ETFs.
So in other words, you do all the work on behalf of the investor so that it makes it easy for investors to also gain access to sectors that they are interested in, such as the Singapore REIT sector.
Yep.
So when I was analyzing the Singapore REIT market, what I saw is that there are actually quite a number of different REIT ETFs in the market. I think one of the points you mentioned earlier is that for your ETF, it focuses on the leaders in the market. Can you help us understand how does it make it something that provides a proposition for investors?
Okay, so for this IHS REIT Leaders Index, we actually work with SGX on it, and together with our partner 𝗲𝗵𝗵𝗀𝗀𝗋, which is also one of the local external asset manager that deals with property investments and also for the ultra high net worth segment. While we craft this index together with SGX IH team, we wanted to incorporate only the largest and also the most liquid names. So most traditional index ETF out there, they always focus a lot on the market cap. So higher market cap, higher weightage. So for us, first of all, the initial level of screening will be the market capitalization. To be able to incorporate within this pool of universe of selection, definitely you need to meet their market cap requirements. However, for the assignment of weightage, we actually increased or added in a feature what we call a liquidity screening. So we track the underlying daily velocity, the traded velocity. So during rebalancing, we always keep track of the inflows and outflow of the certain underlying, so investors can be sure that whenever the market moves, when we rebalance, their portfolio is always aligned with the current market's interest. Like for instance, you know that some investors always ask about REITs. There are so many sectors. You got hospitality, data center, you got your retail, industrial, warehouses and all. So while you buy into an ETF with a liquidity tracking, you do not have to worry how it rebalances, because we really don't focus only on the market cap, because we add in this liquidity feature. It allows investors to get a more robust portfolio.
So maybe to also summarize that for our viewers, when we think about the market cap, that is the size of the company or the REIT. But when we are talking about the liquidity, it is how much volume the REIT actually trades. So I think what Raphael has shared with us is that for the REIT ETF, it tracks an index that not only follows how big the REIT is, but also how much the REIT is actually trading, such that we are not only getting the largest REITs, but also those that trade more in the market.
Yes, the most liquid names.
So I think that effectively would be an attraction for investors who are looking at not just the big REITs, but also the REITs that trade more in the market and have more liquidity as a result.
Yep, that's right.
So I think looking outside of ETF, I think earlier you shared a bit about money market funds as well. Maybe you can help us understand what are money market funds.
So money market fund, it serves for us, CSOP Asset Management. We run the US dollar money market fund out here. Currently, it's also on Moomo's platform and Cash Plus. It serves as access cash facility for investors. Most of the underlyings itself are just deposit and certificate of deposits. We don't focus too much on the yield. We want to focus on safety a lot more. Our US dollar money market fund is A1 and A2 credit rated. So basically, we have to follow the stringent, I would say the stringent guidelines by MAS to at least have an A2 rating on their portfolio. The average rating right now is at A1. We are pleased to say that. The yield is also around indicative 4.1% net of fees. So while we allow investors to park their monies here while waiting for opportunity, it serves as a more liquid tool because it allows T+0 settlement on the Moomo app. And also at the same time, its track record since our inception, there has never been a single day loss of NAV. So it serves like more like a excess cash facility for investors out there.
So for example, for investors who are looking for stock opportunities in the market, but maybe these opportunities have not come true because the US stock market is at an all-time high, then effectively we can think about how some of these money market funds can be used as a temporary place to park our cash and earn a potentially higher yield while waiting for these opportunities to be present.
Yes, you're right to say that. Certainly, it's more like an excess cash facility. So yeah, it allows investors to easily offset some of their trades.
So I think we have talked about ETFs, we talked about money market funds. Can you help us understand CSOP Asset Management a bit better? Because that may not be a name that many investors here in Singapore might be as familiar with.
Okay, CSOP Asset Management, we are headquartered out of Hong Kong. We established in Hong Kong in 2008 with the first ETF of the 𝗿𝗲𝗄𝗏, 𝗿𝗲𝗄𝗏 ETF that is listed on the Hong Kong Stock Exchange. Then most recently, our flagship product is actually our Hang Seng Tech Index ETF, which has an AUM of over $5 billion right now. In Singapore, we established our office in 2018, and in 2020, we launched the first the FTSE Chinese Government Bond Index ETF together with ICBC. Currently, it was then the world's largest Chinese Government Bond Index ETF. Then in November 2021, we launched the CSOP IH REIT Leaders Index ETF. So this now has been one of the biggest hit among retail investors with an AUM of close to 100 million Sing dollars.
So what would be the key expertise that CSOP Asset Management would be able to bring to the table in helping investors to be able to improve on their investment capabilities?
Well, you can think of us as ETF house. We have over 60 ETFs listed on both Hong Kong and Singapore. But the suite of products changes across the two different markets, as you may know. But for more mature markets, we tend to come on with, I would say, things that are a bit more suitable for the traders, and like a suite of leverage and invest solutions there. And also some of these fixed income solutions, we think that on the wealth building spectrum in Singapore, we tend to launch ETFs that is more aligned to the investments portfolio. For instance, the IH REIT Leaders Index ETF, the APEC Low Carbon Index ETF, as well as the Southeast Asia plus India Technology ETF. So these are building blocks for investors for the products that we launch in Singapore. Pretty much serves as a building block for wealth builders.
So through our conversation, you come across as someone who knows a lot about different financial products. We talk about ETF, money market funds, the entire suite of products. Can you maybe share with our viewers, how did you go about your investing journey? How did you actually start learning how to invest? And was there any book or material that helped you with your investing journey?
Certainly, I think ultimately investing has always been something that intrigues me since when I was younger. Actually, I traded even in my early uni days, single stock and all. So how the ETF came about was that I read this little book of investing, Common Sense Investing by 𝗷𝗶𝗄𝗀𝗀. He's also the late 𝗷𝗶𝗄𝗀𝗀 is the founder of Vanguard ETFs, and also the one of the S&P 500 ETFs out there. I think as a young investors, when you're new to the investing in market, you tend to want to outbeat the market. So you have been punting and all, trying out different strategy, but you realize that, hey, am I actually investing or am I punting? So that was one of the thing that earlier on things weren't working out. And after that, you thought about it, hey, maybe it's time to look into some books and all, understand what you are actually looking out for. Because my investment strategy may not sync with yours. And are you trading or are you investing? So if you're investing, you have to understand your time horizon. Even for trading wise, you also need to understand what kind of trades are you going for. Are you going for a day trade? Are you going for a swing trade? Or tactical long position? So it really depends. And during that period of time, I was trying to find out the right strategy that fits my needs. I've been reading, I think one good book to start is a little book of Common Sense Investing, and followed by Just Keep Buying by Nick McGilly. And also, I think the most important thing to embrace financial happiness is to just read The Psychology of Money by Morgan Housel. Because I think ultimately there's a lot of things to be inside these books to maybe help you find out for yourself what your financial journey might be like.
So for viewers who are interested more about these few books that Raphael actually shared with us, you can actually find it in the links in comments that we will share with you more about these 3 books. But for those of us who do not have the time to read these few books, can you share with us maybe what is one of your key learning from this book that had such a major impact on your investment style as well as decisions?
Key, I think there is no key because ultimately the psychology of money may differ from people to people. Like for instance, what may make me happy may not make you happy, but what I'm happy spending may not make you be happy as well. So it really differs. I think for those who are time sensitive, I think these days there's a lot of audiobooks out there, and also shout out to Libby, National Library Board by Singapore. You got your free app that you can use it to listen to audiobooks. I think it can speed up something over there. You can borrow these books for free. It's absolutely free. I think it allows new guys that want to get started. You can search on it and just read up. There's no harm. You take your time to listen to audiobooks.
And I think one of the points that you mentioned earlier was just how you managed to learn by making mistakes along the way. Was there any major mistake that you made that made you realize that maybe day trading, punting might not be something that you prefer, but actually prefer to have a more passive style of investing by tracking index through an ETF?
So it really boils down to the individual's objective. I think ultimately, as if you were to do trades, losses are just part of the journey. Yeah, if you are taking a trade, they cannot be 100% win trade, right? Yeah, sometimes there will be losses, but most traders, successful traders out there, they will be daring to share with you 70% of their trades are losing trades. Or the 30%, the winning trades, are the ones that covers their losing trades. So if you're trading, then you have to find certain strategy that works for you. Like maybe technical indicators that you may keep an eye out for. The parameters set by each trader may differ person to person. For investing wise, like I shared earlier on, through the common sense investing, a little bit of common sense investing, you don't beat the market. You try to be consistent, and then also through index investing and investing in an index themed ETF generally allows you the flexibility, and also you can also use technical indicators to deploy some of your asset allocation. Doesn't necessarily mean that DCA may work. DCA is average the cost of averaging, right? Some of people may use a monthly DCA format, but that will be a random walk strategy. Some people may choose not to do a random walk strategy and do value averaging. So it really differs people to people. I would say that index investing is a very long journey. Don't take it time to time. Take it.
So I think you've shared with us a lot of the knowledge that you gained from reading these various books. As we end today's discussion, is there one key tip that you'd like to share with the audience around navigating the markets in the second half of this year?
Stay invested. Don't worry about the volatility. It's like somebody tell you that you're having a bad day. The bad day will pass. Your life goes on. Yeah, you just have to keep your feet planted, understand what your strategies are, stay invested.
So to end up, Raphael has shared with us the key tip, which is to stay invested in today's volatile markets. And with that, I'd like to thank Raphael so much for joining us in the Beansprout podcast today at Moofest 2025. Raphael, thanks so much for your insights today, and I look forward to hearing more from you and your team members from CSOP Asset Management in the future.
All right, thanks, Gerald.
Thank you, Raphael.